Yeah. Fuck these niggas cause they always been extra. All these diamonds on me, I don't feel no pressure. Money coming in like I am an investor. She tried to take a break, but I already left her. Oh, when I'm in my car, yeah, whoa. Look up at the stars, it's like, whoa. No feelings involved, yeah. Feelings involved. Put that on my spotlight, whoa. Why you wanna mess up my mood? Wish that you was, but you're not cool. Looking for that's shining, shining. Like, look at these diamonds, shining, shining. Like, look at these diamonds, shining. These diamonds, swear to be lying. I don't keep it night. Body, yeah. Stay on track, roller coaster. Yeah. Fuck her once, keep her closer. Yeah. Just slower. Drop the top, make it home. Yeah. Fuck these niggas cause they always been extra. All these diamonds on me, I don't feel no pressure. Money coming in like I am an investor. She tried to take a break, but I already left her. Oh, when I'm in my car, yeah, whoa. Look up at the stars, she's like, whoa. No feelings involved, yeah, no feelings involved. Put that on my car.
All right. All right. All right. All right. We're going to start right now. I'm not going to make this too long. I just want to break down AU, AUD USD, and GBP USD. So, looking at AUD USD, starting with her first. Um, she is a really, really bad little mama. You know what I'm saying? She gets the job done. As you can see, we have been downtrending since July, July 14th. We've been downtrending since. All right. So today, current day, we are on Thursday, September 14th, 2023. And and this setup right here was super clean because we're in a downtrend for a while now. So this is my thought process behind this buy that I took this week. This buy that I took on Wednesday, September 13th, 2023. Right here, we see that we've been downtrending for a while on the 4-hour time frame. And we use the 4-hour and the 1-hour time frame to determine what the market is gonna do, the direction of the market. We also use the daily, but that's on earlier videos, me breaking down daily, and that will be in future videos, me breaking down daily. I will just be breaking down how I got into this entry on the 1-hour using the 4-hour time frame. So right here, I'm just gonna cut to the chase. Right here on a 4-hour time frame, like I said earlier, we've been downtrending for a while. As you can see right here, this entry right here was on the 886 area on the fib after a lower low was created, and then we got the pullback into our institutional candle, our last up candle before the down move. This right here in the middle is considered internal liquidity. So the market came and wicked past this area that people were selling in earlier, which was which was August 4th. So we got this big push down that broke past this structure right here, this lower low point, because we are looking at lower high. We're looking at lower low, lower high, lower low, lower high, lower low, lower high, lower low. Why is this a lower low? Because it broke past this lower low. So market structure plays off of higher highs and higher lows for buys and lower lows and lower highs for sells. So this is our most recent lower high point that played off the 886 into this institutional candle, this last up candle before the down movement, this last up candle right here. Let me pull out an arrow. This last up candle right here before the down move. We got this move right here. Anybody that got into sells profited really well. If they didn't collect any partials or partial profit, they got stopped out with this manipulation move right here from the big banks, which was perfect into our 886 zone, expecting this internal liquidity to be wiped out right here. Nicely tagged. That's why I love watching out for manipulation moves like this, because when there's a manipulation move like this that continues the trend lower, it's a high probability trade for sells. All right, so we have the same scenario right here that we took earlier today. So it's a lower low, and then right here we have a high, a low point, not lower low because it didn't break past this point. We was in the buys in this area, we saw profit, but since on a 4-hour time frame that we're on right now, it's downtrending, so we collected profit fast and we didn't hold it, and then it continued downtrending lower. So since it continued downtrending lower and we're on the 4-hour time frame and we don't have any signs of price going up, I use this lower low point as my gauge to come up into this area right here that I'm about to mark out right now. So bear with me. We came up into this area, or we're coming up into this area, this last up candle before the down move. Remember from our earlier videos, we're using market structure. We're using the fractalness of the market to determine our plays. So since we have this lower low here and we have this area on the 4-hour time frame as our point of interest area, our area of interest to continue the downtrend, in the moment of us climbing up into that point, a buy opportunity presented itself on the 1-hour time frame. And how do I know that? Because right here we started creating a 1-hour structure that was respected. This right here was a lower high right here. Give me a second, let me mark it out for y'all. This point right here that I'm gonna mark in blue was a lower high point on the 1-hour time frame, because we have lower low, lower high, lower low, high, higher low, higher high, higher low, higher high, low, high, lower low, lower high. So if you rewind the video and you go through it slow motion, you'll see why it makes sense. Low, lower high, new lower low right here. Mark it out in a circle for you. Again, like I said, if you're confused, you can rewind the video and replay as much as you want. But right here was our new lower low point. So based off of that lower low point that we created, if the 4-hour downtrend is to continue from this area right here, and I always speak in terms of if so, then I will do this. If that happens, then I will do that. Keeping that in mind of not knowing what the market's going to do next, but picking higher probabilities. I expect price when it hits this green box for it to continue the lower low point. If this downtrend on the 4-hour time frame is true, if this downtrend on a 4-hour time frame is respected, then we will see lower pricing in this area. But while we're waiting for that area to get hit, I saw an opportunity for buys with internal structure right here. And how did I see this opportunity? Because remember, like I said earlier, and to get a better understanding, if you're not experienced, you can rewind the video. But remember, as I said earlier, this area right here is a lower low point on the 4-hour time frame and the 1-hour time frame. So when this lower low point got formed, it created a higher high. Why? Because on a lower time frame, on a 15-minute structure, remember we're using all of our time frames together. If I click in this area on the 15-minute time frame, the most recent lower high point got broken by this movement right here. So paying attention to 15-minute time frame, let me show you guys. Paying attention to the 15-minute time frame, mind you, we're on the 15-minute. We have lower low right here, lower high, because there's 2 bullish candles that got taken by more than 2 bearish candles. So this is a lower low. Mark this out for y'all. This point right here is a lower low. This point right here is a lower high. Let me lock this drawing real quick. This area right here, lower low, lower high, created a new lower low. So when a break of structure occurs, our most recent lower high has to get broken by candle closes that break past that. So if you pay attention, if you look at the candles, if you look at the language of the candles, you can see that this lower low formed, this lower high formed, and then it created a new lower low because it broke past this low. All right. So since we have this most recent lower high, I have this line drawn here because you see candle closes come, pull back, and break past these candle closes right here. I can zoom in for you. These candle closes right here, not the wicks, but these candle closes, these body closes. You see that it broke right here and it broke right here. So that's a break of structure on the 15-minute time frame. All right, because it's disrespecting the downtrend on the 15-minute. So when I saw that, I went back on the 1-hour and I waited for price to develop, being patient, being a patient sniper. You know, as a sniper, you need to be patient and wait for your setup, not be a gunner in the market and try to trade everything you see, because that's how people don't end up profitable. So the break of structure happened right here where I have this arrow. Let me delete this arrow real quick and let me pull out a new one so I can properly show you guys. So this lower low point on the 15-minute time frame went into a lower high, which is our recent lower high point. went into a new lower low. We got our break of structure with these candle closes right here. If you look on the 15-minute, you'll see that these candle closes broke past this lower high point, which is our most recent lower high point. And then I waited for price to develop. When I waited for price to develop, this is what happened. We made a new high. All right. Seeing this makes me confident as a buyer to continue this structure. So we went into a higher high point. Now we're in a higher low point because it's higher than this low. Made a new high. Made a new higher low point because it's higher than this low. Made a new high again. Give me a second. Made a new high again. When it made a new high, I was like, yeah, I'm gonna catch this pullback. So we made a new higher low point. I didn't get in yet. I waited for extra confirmation. I could have gotten in, but I didn't. I waited for extra confirmation, and I saw this big impulse move and price up. All right. So I saw this big impulse move. This big impulse move tells us, as a market speculator, it tells us that big money banks are favoring the buys in this area because we got a big giant push up after this trend has been formed. All right. And that's very important. So after that trend, after this trend right here that I'm about to mark out for y'all got formed, this whole area right here, this was our trend. Higher high, higher low, high, low, higher high, higher low. This is our trend that was formed, which shows us accumulation for buys. And then we get this big impulse move up. Big impulse move up. This big impulse move up shows me signs that big money players, big banks are favoring the buys in this area. So what do I do when I see stuff like that? After disrespecting a downtrend on a 4-hour, like I was talking about earlier, what I do is I pull out a Fibonacci tool. I pull out a Fibonacci tool, and I take it from point A to point B. This is point A, which is our most recent higher low point in our structure that's formed right here. So point A to point B, which is the high that forms after you see it starting to pull back. So when I started to see this pull back, pull out another arrow for you. When I started to see this pull back like this, when I saw this, I was like, bet. That means we're going to hit this area to mitigate. And sure enough, it didn't take too long. We got triggered in. I called out the buy limit right here off of this area. I called out the buy limit for us to have a pending order right in this zone, and it triggered us in. And it gave us a beautiful 1 to 6 opportunity. So this little tiny move right here from this gray box to up here, that was a 1 to 6. If you were to risk 1% on your account, you would have made 6% back. And there's a lot of people taking funded challenges. To pass phase 1, you need 8%. And there's different types of funded challenges, from 200K, 300K challenges to 100K, 10K, 50K, 5K, and so on and so forth, right? So imagine if you would have took a 100K account and you would have just took this one trade, you would have already been up 6%, which is $6,000 off of this tiny move, which is only 70 pips. There's a lot of people in the markets that are trying to day trade where they can't even catch 20 pips or they can't even catch 10 pips. But off of this one little move, we're catching 70 pips, 69.6 rounded up is basically 70. And our risk to reward ratio is a 6.11, which means if you're risking one apple in terms of fruit, if you're risking one apple, you'll receive 6 apples back for risking that one apple. All right. For the new people that don't really understand risk to reward, or they don't remember, like basic elementary school math, a 1 to 6 is if you put 1 in, you'll get 6 back. That's a 1 to 6 risk to reward ratio. So now we got triggered in. Let me delete this real quick. We got triggered in with this little wick that happened during news before New York Open, which was like 9 a.m. New York Open is 9:30 a.m. Eastern time. I'm Eastern time, by the way. So we got wicked in with that little hair right there. You can see it right here. We got wicked in with that little hair into our pending order exactly at 0.63818, and market started uptrending. Why did market start uptrending? Like I said earlier, remove all these drawings. Like I said earlier, we had this lower low point on a 15-minute time frame. We had this break of structure to the upside, started giving us market structure for buys. And then when I saw this big move up, that was my confirmation to say, hello, it seems like it's high probability for us to have this pending order right here on this last down candle before the up movement, this last down candle before the up movement for prices to come back. It left the imbalance in the market, so prices came back to rebalance the market, come into this zone right here, and gave us a beautiful, give me a second, and gave us a beautiful buy opportunity once it hit this last down candle before the up movement, big impulse movement up, gave us a beautiful buy opportunity once it tagged that candle, which was amazing. Amazing, amazing, amazing. I know there's a lot of people out there that trade that are trying to catch 100 pips, 200 pips, 300 points, whatever it may be, or they want to catch like the whole uptrend all the way to the top, and they won't even collect any partials. They won't move their stop loss to break even. They'll just hope and pray that it keeps going up and up and up, and that's just greed. That's greed, and it's also fear, because you're not being confident in securing your profits because you want more profits, because you want more money for yourself. But in reality, if you're trading a big account, this little move from here to here, that's $6,000. Like it's $6,000 if you're trading a 100K account and you're risking 1% on this little candle right here from top to bottom as your entry and your stop loss. So right here was a beautiful opportunity for a 1 to 6 risk to reward ratio. And I do see AUD USD continuing to uptrend past this high right here. Continuing to uptrend past this high right here and continuing to come up to this area. But if it doesn't, that's fine. It might just sell from here and continue lower. But as market speculators, we don't know the future. We just trade high probability setups. So that was AUD USD. Beautiful 1 hour, nice sniper entry. Sniper entry. What the fuck is drawdown? You got to Google it. And I'll always love saying that with ego and pride, because there's so much people out there that act like they know how to trade and they really don't. They're just guessing and assuming and, a bunch of bullshit and full of white noise and shit, So AUD USD was beautiful. It might take this wick back and it might start downtrending from here to wipe out these lows, and that's fine with me. And it's completely fine with me because I already collected profits. I already secured the bag. I'm not worried about what the market does because I have 20% left riding after I collected 80% of my trade. All right. So that was AUD USD. Now we're going to move on to GBP USD, what we traded today. I called out this trade to the team, and it was so clean. It was so textbook setup because on the 4 hour, like I was talking about AU, but AU was moving different from GU. On the 4 hour, we got this lower high. Let me mark this out for y'all. We have this lower high point, came into a low, created a new lower high, a new lower low, a new lower high, a new lower low, a new lower high based on the 15-minute time frame or 1 hour, into a new lower low, into a new lower high. A new low was formed right here. When a new low was formed right here, I saw this last up candle before the down move. So when this new low was formed after this lower high, I was like, okay, if the downtrend is going to continue, then when it comes into this pullback area, which is a new lower high point, we should see lower pricing. High probability setup. I can't tell the future. I just trade on based off of high probability. All right. So if you go on the 1 hour time frame, you can see the market structure better. And this is how I took my trade. So I was paying attention to the 4 hour at first, but I used the 1 hour time frame as further confirmation to see, okay, is this truly the lower high point that we're going to have? So right here, we got the lower high point, lower low, high, low, lower high point based off of the 4 hour time frame into a new low, created this noise right here in the middle, which I consider internal liquidity, like I was talking about on AUD USD. If you don't remember, rewind the video so you can see what I was talking about on internal liquidity. I saw this internal liquidity here. I didn't sell it yet. Waited to see it dump. I saw it dump and I was like, okay, we should see this last up candle before the down movement. Let me get an arrow for you. When I saw this movement down, that's a lower low for me. Why is it a lower low for me? Because this structure was forming as support. A lot of people love trading support and resistance, but support and resistance is bullshit and it always gets disrespected. And I'll keep proving that with more YouTube videos. I already have like 5 YouTube videos, maybe. I don't know, maybe 8. And I keep talking about how support and resistance is trash. It's free information that they offer on YouTube, making people think that, oh, that's the way we're supposed to trade because it's obvious that this support is holding. Well, that's bullshit because if you try to buy the support right here, you got stopped out with these 2 wicks right here. But as a smart money trader that I am, I saw the candle close and you can see this black candle close past these supports right here. Leave this arrow right here so you can see, and I'm going to zoom in. So we have this support right here formed, this support right here formed, then it made a high. So anybody that traded this support, you know, they profited well. You know, I'm not saying you can't make money off of support and resistance. You can make money off of any strategy that you choose. You just got to make sure you're trading by risk to reward so that you're actually profitable. But since I knew that this support was forming, I was anticipating for this support to get disrespected. So when this noise happened right here, let me pull out another arrow. When this noise happened right here, right here, right here, right here, right here, right here, downtrended, created more noise as internal liquidity. And then I see this candle close. I see this This big black candle on the 1 hour time frame close its body, not the hair, not the wick, but close its body past this point and this point and that point. I was like, okay, let me delete all this first. I was like, okay. Give me a second. Looking for the undo button. There it is. All right, give me a second. Just bear with me for 1 second. I need to delete some things. Where's my eraser, yo? Maybe it's here. No, it's not. Text. Maybe it's here. There you go. All right. Like I said, if you're lost, this will be recorded and it will be uploaded on YouTube. So you can rewind it as much as you can, as much as you want to. But you pull out an arrow again. So, like I was saying, when I saw this big fat candle close past these support areas that are bullshit, I said, okay, that's a sign to understand that the downtrend is going to continue. Because if this area would have been respected, then it would have continued uptrending. But since I saw that this lower low point got created because of this candle close that happened, I knew that a pullback was coming for a nice high probability sell that cleared up this imbalance. And I say cleared up this imbalance because these candle closes cleared this imbalance in the market that happened. This is our last up candle before the down movement. This whole movement right here, this right here, and this last up candle was left behind, and it triggered us in 1, 2, 3, 4, 5, 6 times. Triggered us in 6 times, gave us 6 opportunities for us to get in on time, and it dumped to continue the downtrend structure that we see on the 4-hour time frame, which was continuing the overall trend of GBP USD, which was just beautiful. It was just textbook, because GBP USD has been downtrending for a minute. So remember how I was talking about how on AU it was downtrending for a while? If you can rewind the video if you don't remember that. It was downtrending for a while, but the only reason why I bought it is because it created this structure on the 1 hour and then it gave a break to the upside. And that's why I bought this area right here into our discount zone. You know, this point A to point B on the fib, exactly in our 886 area into our institutional candle. We got that mitigation for the buys up for a beautiful 1 to 6. Remember how I said that? Well, GU didn't offer that. And since I have experience in the market, I'm able to identify that even though AU and GU move similar, that doesn't mean that they're correlating all the time. Because AUD USD correlates with NZD USD, and GBP USD correlates with Euro USD. All right. So since I knew that they're not correlating pairs, I knew when I didn't see a break of structure to the upside like I saw on AU, which was here, big impulse move up. On AU, I saw on the 1 hour this break of structure, or this continuation of the structure, when it broke past these equal lows, this support area. So when it broke right here, right there, let me mark it out. When you see these candle close, you can notice how this black candle closes. That's why I have this arrow here, this line here. It closes past these two candle closes, because that's signs, even if it's the littlest detail, but it's signs that our downtrend is going to continue. So when I got the pullback into our 786 to 886 zone, just like AU, but reverse 786 to 886. Let me show you. So you say I'm not lying. We know what we're talking about. From point A to point B. It wasn't quite 786 to 886, but it was still 702. Into our institutional candle, our last up candle before the down move, wiping out internal liquidity, which is right here. Wiping out internal liquidity with these hairs right here, this hair, this hair, this hair, wick past that. So anybody that sold too early got wiped out, and it gave new opportunities for sells right here, which is what I called out to the team. So right here was our entry. It was exactly this one right here. And then it played around for a little bit, came back, gave us another entry, but we didn't play that. And then it dumped. And it dumped and provided a beautiful 1 to 4 risk to reward. So if you would have risked 1% on that, you would have made 4% back. Now AU gave us a 1 to 6. From the entry called out to the team. Risking 11 points, 11.5 points, 12 points basically, all the way to where it trended up to. That's a 1 to 6 right there. So right here, when it hit this area, that's 1 to 6. You would have made 6% on that trade. And on this trade, you would have made another 4%. 10% in total just on 2 trades. And there's motherfuckers out there that trade gap trades and they trade all this bullshit. They'll hold through seeing a lot of negative red numbers, holding through a lot of drawdown just to finally see them in a little bit of profit just to close. We don't need to do all that bullshit. We can wait for sniper entries and get and achieve our objectives way better and more efficiently trading this way, smart money concepts, than waiting on retarded gap trades and holding through losing trades and hoping that it will come back up in your favor or hoping that it will come back down in your favor. All that shit's bullshit. You know what I'm saying? So I've been around for a good amount of time. I know what I'm talking about. I have the track record to show it. I'm going to keep dropping trades in the chat. Thankfully, I joined this new Discord chat, which will influence me to post more videos because a lot of people need to learn about this stuff. The market is possible. It's very possible to read it the proper way instead of just placing random trades and hoping for it to go back in your favor. You know, so I end this video right here. I'm going to answer this chat box that I got right here to see what they're asking. And where will the recording for this be reposted for this? I definitely want to rewatch this. I'm gonna upload it on YouTube, and I will drop the YouTube link on all my chats so that everybody can review it and study. It's very important that we study this because this skill, once you learn this skill, nobody can take this skill away from you. unless you have like a brain aneurysm, or unless you lost your mind and you can't think no more, then that's the only way you'll forget this skill. But once you see it, you can't unsee it, you know? And on earlier videos, I was talking about how you can use your daily time frame and your 4-hour time frame to basically determine the overall trend of what the market is going to do. I mean, look how simple it is. And you will never know that it's this simple until somebody shows you, because there's so much trash on YouTube and there's so much trash in all these groups that they don't know what the fuck they're talking about. They're just hoping and praying that it goes in their favor, when they should get educated and pay for some education so they can see that it's possible to actually know where the market is going. I mean, not 100% you're going to know where the market is going, but you will get a gist, a firm understanding of what a high probability setup looks like. I mean, look at this. You got a lower low, lower high point into a lower low. And then this last up candle before the down move forms. And look, this manipulation wicks right into that perfect, clean sniper entry. Another one happens right here. This lower low point into a new lower high point. Nice sniper entry into this last up candle before the down move. And then right here, it continues because there's this imbalance in the market. The market works with imbalances and it likes to rebalance all the time. So it's not hard to understand. Right here is imbalance because you got this big giant up movement, and then the market comes back and rebalances it. It rebalances it because it doesn't leave moves like this without being filled. So while that's happening, you can catch sells into these areas, and then you can just collect profits once you see it going into your favor. You don't even have to hold through the whole move. You could just catch a nice snipe and collect profits, collect a quick 2%, collect a quick 3% by just understanding how the market structure moves, you know? So if you're further interested in learning about those things, I advise you to watch the rest of my YouTube videos. They're only about 20 to 30 minutes long, maybe 40 minutes. You can skip through the beginning parts and just cut to the chase. I don't talk too much bullshit. I just get straight to the point. So I hope everybody that watches this video learns that it's not really that hard to understand the markets. Yeah, you might be new to this information and you might be new to these terminologies, but with time and enough studying, it will start to puzzle together and you'll start understanding, wow, trading really isn't that hard. People just make it hard. All right. So I leave it with that. I love you guys. I appreciate you guys. I appreciate all my subscribers. I appreciate all the likes that I get. And I appreciate all the supporters in the chat rooms. You know, I'm going to still be working hard, working all day, every day, so that you guys get the proper education. And I'm always learning, just like you guys are always learning. So much, much love. You know, easy snipes. Make sure you use your stop loss. Make sure you're not risking more than 1% of your account. Or if you want to be more conservative, make sure you're not risking more than 0.5% of your account. You know what I'm saying? Always let yourself be available to leave room for error. So when the losses comes, it won't affect your account balance too much because you're only risking 1%, or you're only risking 0.5%. You know, so you always gotta make sure you manage your risk so that you don't get clapped and you don't give your profits back to the market when the losses do come. Because even though I am experienced, losses still come. You know I win a lot of trades, but losses still come. But when they come, I'm conservative. I protect my account and I make sure I'm not risking more than 1% or half of a percent of my account, because the market will take your socks away. It will take your underwear. It will take your shirt. It will take everything if you let it. So always be on defensive mode. Always be open to opportunity, and make sure you're not trading more than 3 or 4 times per week, so that you're the casino and you're not the gambler. All right. So I love you guys. Peace and love. Make sure you take care of your family. Make sure you work hard. And that's all I got for today. Peace.